Hey guys, thanks for coming. Excited to talk about what's going on in the market right now, and we will jump right into it. So this is our second quarter owners call. We're going to go over some big picture advice from Warren Buffett and this other guy at the National Association of Property Managers conference that I came back from recently. We'll talk about financing with Drew Blakely, see what's going on in that world. Sean's going to share with us what's happening in the sales world. I'll talk about some rental trends, and then your very own Dominique Beach is going to talk to us about how to buy HUD homes from the government. Really excited about that. Yeah, so it's now is just such an apparent time to bring up how important it is to hold properties for a long time. So Warren Buffett says, his favorite holding period is forever. If you guys buy a really quality home from Sean and you get great financing from Drew, fixed debt, and you hold it for a long time, you're going to make a lot of money. Never depend on a single source of income. So you need to buy more than one property. And risk comes from not knowing what you're doing. And then the last one, time in the market is more important than timing the market. So I talked about this just about on every call for the last year. But I'm really excited to define to you guys what these markets are, right? So knowing where you are kind of informs how fast you should buy something, what you should buy, and kind of the risk. And the real estate cycles are defined by these four phases: recovery, expansion, hypersupply, and recession. And then just some new updates for you. The average phase is 3 to 5 years. So we're going to be in a recovery phase for 3 to 5 years. We'll be in an expansion phase for 3 to 5 years. We'll be in a hyper supply for 3 to 5 years. We'll be in a recession for 3 to 5 years. And it takes, on average, since the early 1900s, 12 to 18 years to go through this entire thing. So I think that's important for us as investors, because as we feel rental rates go up and down, we kind of think like, oh, are we here right now? Are we here right now? Are we here right now? Well, we're going to be in the phase for a little bit longer than one summer season or one off season. And at a conference I just came from, this guy talked about how to define where you are. So we're going to define this recovery as like seller's market 1. We're going to define expansion as seller's market 2. We're going to define hypersupply as buyer's market 1. And then we'll define the recession by buyer's market 2. And it's cool when we do this, because if I go here now and I say seller's market 1 is defined by inventory going down, time going down, pricing going up, employment going up, investment property activity going up, new construction and foreclosures being flat, we all think of 2020, 2021. And it's really cool to hear what Sean's about to say and figure out, hey, where are we in this cycle, to inform us how we're buying things. And it's just really, really cool. So we're in a place where I think we're kind of right here right now. So we're going into some kind of equilibrium or some kind of buyer's market. But yeah, I'm sure Drew has a lot of things to say. Can y'all hear me? Can somebody try to click next? I can't click next. I think my computer froze or something.
I can't click next either.
All right, Drew, you're up with no aids. How do you feel about that?
Good. Let me pull it up in another. I'll pull it up in another tab here.
Let me see if I unshare and reshare, if that works.
Okay. If not, I got it pulled up and I'm ready.
Yeah, huh? That's so weird. You want to share your screen?
Sure. Let's see.
It just froze.
Let's see if I can share my screen. Let's see.
Are you having issues too?
No, I think I got it. All right, can you see my screen?
Uh-huh.
Yeah. All right, you want me to hang here for a minute?
No, I'm just excited to hear Drew talk and Sean talk and kind of like thinking through this lens. Where are we in the real estate market cycle as you guys talk? So for those of you that don't know Drew, he's a real estate investor. He is the most honest and mortgage lender with integrity that I know, and always gets me the best rates for things, or tells me when he can't do something and helps me figure out the best way to do it. So Drew, I really appreciate you, and I'm excited to hear what you have to say about mortgages.
Yeah, thank you. Thank you for that kind intro, Schuyler. I wanted to introduce myself to those of you who I don't have the privilege of meeting or who were not on the Q1 call. Like Schuyler said, my name is Drew. I grew up with a fascination in real estate. My dad actually taught me everything that I know about real estate. We were from a very middle class household in the Midwest, and we paid for my entire college through fixing and flipping foreclosed homes. And so had a lot of interest in getting into real estate post college. As a newlywed, my wife and I, we actually house hacked. We Airbnb'd a bedroom in our house so that it paid for our mortgage. And my love for real estate got me into the mortgage career about 5 years ago now. So I want to talk a little bit about where it is that I work and some of the different advantages of working with myself and our team. I was previously at a really large mortgage company. It was a great, great place. But what I realized is that the larger the company, the harder it is to adapt. And that's especially important for investors, people who want to get creative, people who want to think outside of the box. If you don't have somebody who, not only a loan officer who can leverage their talents well, but then also a company that backs them by being really adaptable, it's really hard to work with a company like that as an investor. So the first thing is we're a really adaptable company. The second thing is we're small, we're agile, and we provide really, really sharp interest rates. I can say that with a very honest heart that we provide great rates. And then, like Schuyler said, I really enjoy being a consultant. I have a lot of connections in the local area. So if you call me for, let's say, a fix and flip loan, or you call me because you need a home equity line of credit, I might not be the best at either of those products, but because of my local connections, I would hope that I would know somebody who would be the best in that space. So again, that's myself and some of the advantages of loan study. Wanted to talk about
real quick, Drew, can I just give you a plug there?
Yeah.
Guys, his like small company size and like zero BS approach to me is really refreshing, because he's going to have less points on his mortgages than other people are going to have. So what that means to you and me is the loan is cheaper and closing costs are cheaper. And then there's not going to be this haggle, like, tell me, what's the other guy doing? Or, like, you go to Drew and you're like, hey, this is what I have. What's the best rate you can give me? I don't want to buy points down. I'm going to hold the thing until I pay it off, or I'll buy points down because I plan on selling it in blah, blah, blah years and I need something. He's just going to give you an honest price and not give you something and then expect you to shop it around and then come back to him and say, hey, I got something a little bit cheaper. Can you beat it? And then they're like, well, I don't know. What is it? And it's just like, if you're trying to do this and you're a busy professional, you want somebody to just not BS you. And that's Drew. And I really appreciate it.
Yeah. Thank you. Thank you again, Schuyler. Yeah, we're always going to put our best foot forward first time. I understand how exhausting and stressful it could be to buy a house. So I'm not going to add to that level of stress by dragging you around, shopping your mortgage to everybody and so forth. Speaking of rates, wanted to talk a little bit about the trajectory of mortgage rates, where we're going to be headed for likely the rest of this year. Last week at the Federal Reserve meeting, they said that there could potentially be a couple of rate cuts this year. We might see the first one as soon as July. Right now, current interest rates as of yesterday for a conventional loan, primary residence, no discount points, we're sitting about 6.8, an investment property in the low 7s. You have your FHA and your VA loan about 6.3, and your jumbo loan is in the high 6%. If you don't take anything else away from what I'm going to say, I want you to take this away. The bond price as of Monday, all right? So basically a mortgage, what is a mortgage worth? The bond price on Monday was the exact same to the penny as it was in July of last summer. So what we're seeing here is we're seeing really, really stable rates. We're seeing small ups and small downs, but what we're seeing is an incredible amount of stability in the mortgage market. And then if you take it one step further, you'll see that the predictions, okay, the predictions are released every month or so. The predictions from the Mortgage Bankers Association are indicating to us that rates are going to stay stable all the way through the end of 2026. You see, maybe they'll fall from where they're at right now, 6.8 down to 6.4. But what we're seeing is for at least the rest of this year, we should not see a whole lot of decline in mortgage rates. So again, as Schuyler kind of started this whole thing off with, if you're waiting to buy, I probably wouldn't. Now is the best time to buy, and you can hold on to it. With that being said, going to transition over to Sean. And Sean, if you'll just kind of ping me when you need me to flip to the next slide, that would be great.
Okay, thank you. And hey, everyone. Yeah, so overall, it's kind of brutal out there on the sales side. And I think overall, there's just a decrease in consumer sentiment on both sides, buying and selling. And generally speaking, sellers aren't selling their house for as much as they want, as quick as they want. And buyers, while there are opportunities, are frustrated with the lack of affordability. There's, in our area, it's just really tough for some first-time home buyers to get into the market. It's still possible, but it's just more challenging, and typically their costs are higher than they're comfortable with. So I'll start big and kind of zoom in, but I think just before I dive into it, it's so important to have a good lender like Drew helping you navigate this process. But yeah, looking at the national trends, so overall record inventory over the past 5 years, highest inventory since the winter of 2019, lots of price cuts. You can see realtor.com has 31.5% year over year inventory increase. But with that, kind of like Schuyler said on that slide, with the whole cycle of real estate markets, we are entering into, a buyer's market in our area. And I'll dig into some of the local stats in a couple of slides. But there's, fewer competing buyers as the supply of listings goes up. So a quote from the Compass CEO says, currently it's great for buyers, more supply, more wiggle room on the sale side. And with mortgage rates being a fairly known factor without a bunch of, turbulence, it's, it helps provide some clarity on that end. You can go to the next slide, please. So I think some forecasts, they still expect overall across the country home prices to grow this year around 2 to 3% overall. But there are areas in the country, like a lot of the big cities, Austin, Texas is seeing pretty sharp price declines. In Denver, a lot of areas that just boomed during COVID in the Southeast and Florida are seeing so much inventory that the prices are now dropping. Go ahead. So overall, I tried to kind of narrow down like what the implications of some of these trends are. So with slower price appreciation, less upside, kind of what Schuyler said too, it's like a good market to just hold in. With high inventory, we have more opportunities to negotiate on the buyer side. We're seeing lots of price drops and seller concessions, and buyers just generally have a little more leverage in the negotiations. I would say, elevated mortgage rates, that's kind of, just from what we're used to over the past 5 years, but it's looking like that will kind of persist, but balance out some of the financing costs. And then locally, we are, definitely trending into a balanced market, which as a seller, it's very important to price your house accordingly. People are wanting like new. So if you have a 20-year-old property that hasn't been updated, then take that into consideration, because you're competing with a lot of home builders who are offering, $20,000 in closing costs and upgrades, and everything's brand new. And then I do think, though, the properties that are priced well and in really good shape still are moving fairly quickly. Now I'll get into some of the local trends in our area. So it's a fairly balanced market right now. There has been a pretty big increase in inventory across all 4 counties, and there is decent appreciation still too. So that's why I said, like, consumer sentiment on the buyer side, I think there's a lot of people who are saying like, hey, I'm waiting for prices to drop. Like, prices have to drop, but it's still, while that might happen in some areas, like, it's not really happening yet here, at least. So Wilmington or New Hanover County saw 6% year over year, growth in average sales prices. So time on market, definitely listings are staying active longer, kind of in line with that national trend. And then overall, like, Wilmington metro area as a whole is shifting towards this equilibrium where, like I said earlier, sellers have to price appropriately and, buyers ready to act. Next. Here's a little breakdown with the 4 major counties. So, you can see which counties prices are really remain flat, and Brunswick and Pender, and increased pretty significantly still in New Hanover and Onslow. And then, I kind of just show some of the data there. The supply is month supply. So that's kind of a weird data point to understand, but it's basically saying that if there are no new listings on the market, it will take, in New Hanover County, 5 months for all of the current inventory to sell, which is a huge increase from what we've seen over the past couple of years, where, there were times when it was like less than a month supply. Houses were flying off the shelves. That was a very strong seller's market. But now we're, shifting more towards a normal market. Generally speaking, like 5 to 6 months is a normal market or equilibrium. If it gets much higher than this, it's going to shift into a stronger buyer's market for sure. Next.
Sweet. We can only hope, Sean, it becomes a fun buyer's market. So nationally, what rents are doing. So rents actually fell the most they had in the last 14 months. So nationally, there was a 1% year over year drop. But it's not all doomsday, right? This is showing you a trend of rent since July of 2019. So you can see that we are still up. We're down a little bit from July of 2022, but generically speaking, we're still up. And just like a sidebar to give you guys more confidence about buying stuff. This isn't a political statement. The government just approved a $1.6 trillion deficit, and for them to make all of that happen, they have to print money. And when they print money, it drives the price of our homes up and the things of real value up. So we have monetary policy in place to just continue to have houses increase in price. And I'm saying price, not value, because the dollar is being devalued, but it's a good place to put your money. And rents, as you see too, are going to continually trend upward slowly over time. So next slide. Locally, there's, we saw that rents went down because supply went up and demand went down. So we're kind of seeing the same thing locally a little bit. There's actually, if you just go on Zillow and you're like single family homes for rent in Onslow County, there's 254 as of this morning, which is the most I've seen since 2017. There's a bunch of major apartments that are, I think those investors are scared because they're filling up a lot slower than they thought. And they're offering crazy incentives. So there's major apartment complexes in Sneads Ferry right now that are offering 2 months off rent, 2 months off of your year in rent. But people are still moving here. So like migration trends are still positive. And if you buy right, it's still great. We listed a 3-bedroom, 2-bath in Jacksonville on Friday last week, and we have 12 guest cards or 12 people that are interested in it. We got an application in already. So the right product is still attractive, and if it's priced right, you can get it leased up pretty quickly. If you have a bigger house, so things that are hard to rent right now are properties that are priced over $2,500. So if you're trying to rent something like that, or it's a townhome that's competing with those apartments that are given 2 months off of rent, then things are sitting harder, and it's harder to compete with all the other products that are out there, the 254 other single family homes for rent. Next slide, Drew. So this is just a recent study showing you where people are moving. So people are moving out of the blue states and into the tannish or the dark orange states. So North Carolina is still a good place where people are moving to. And this is what supports, as Sean was saying, price rises in Onslow County and New Hanover County going up. It's because people are coming here. Next slide. So rental rates. So the stuff in white is no change. I'd like to highlight the 3-bedroom, 2-bath in Jacksonville is slightly up. And then 2-bed, 1-baths in Sneads Ferry are about $50 up where they were last quarter. Just some exceptions. If they're townhomes or they're large single family homes, they're taking a long time to rent. Next slide. So that is the down and dirty about rents, about sales, about mortgage rates. And I am just super pumped to introduce you guys to Dominique. She is a real estate investor. She joined our team in April, and she is a no fluff, down and dirty, this is just what needs to be done kind of girl. She worked for a firm and was the listing agent for a firm that was partnered with HUD. So I'm going to not mess up her story, but I'm just super excited. When you see her, you're going to be like, wait, she was kicking people out of their homes in the foreclosure process? I don't get it. She has a lot of war stories. So Dominique, are you there?
I am. I just turned my camera back on too, so hopefully you can see me.
Sweet. Yep. So yeah, guys, Dominique, your very own. What are you going to teach us today?
Oh, the good stuff. Yes, I was the department head of a very large real estate firm in Fayetteville, and I was their primary foreclosure listing agent with a heavy focus on HUD homes. The first slide is the hyperlink for the HUD home store. You can look up all of the HUD properties in the entire United States. Currently, there's only 19 that are listed in North Carolina, and there's only 10 listed currently in South Carolina. The website informs you of the listing period, when the bid opens. It gives you all sorts of information. The biggest thing that website has is property condition report. And it's like a checklist, if you will, of what the property condition is. But it's not like an inspection or anything like that. Next slide. There are 3 different types of HUD houses. Insured means that you can most likely get an FHA loan on that property. Basically, it's a foreclosure, but it's not in like horrible disrepair. Insured with escrow means that it does have some repairs that are needed, and a buyer will have to escrow those repairs for that property.
Dominique, who's determining, like, it's you, right, that we're determining these qualities?
So as a HUD listing agent, you go and you do like a inspection, if you will. But HUD ultimately decides if they're going to fix things or if they're going to keep it as like uninsured. 9 out of 10 times HUD will not fix things on their property. I've had properties that I've personally listed that would have a literal hole in the ceiling, and HUD sent contractors out there to put a tarp on it. So it all depends on the property. There's really no like guidelines, if you will. Like with 2 properties, one, they could both have a hole in the ceiling per se. They'll fix one, they'll put a tarp over the other one. The last one is the uninsured. That means if there's more than $10,000 in repairs, you cannot get financing on it. You cannot escrow repairs. It's typically cash or hard money loan only. They do have certain properties that have the 203 like rehab loan. I have never personally done one. I heard that they are nightmares. So that is an option if HUD's willing to work with you on that. Next slide. This just goes over HUD's as-is policy. Kind of already said it. They do not do any repairs. You are not allowed to do repairs as a buyer. And they won't do repairs. So if you get under contract with a HUD property, you do a home inspection, you realize there's something, you just kind of have to deal with it. Does not matter what it is, they will not do repairs. The property condition report, me as an agent, I would always send it to my buyers and make them initial it that they have seen it. Like I said, it's not an inspection or anything like that, but it does go over the condition of the property. Next slide. There are 3 different bidding periods within a HUD property. The lottery period, I have not personally seen that one a whole bunch, but there is a period where you can start bidding right away. The exclusive period, that is for owner occupants, nonprofits, and government employees. Most of the time when I would bid on a HUD property, it was during the extended period because I work with quite a few investors. So that's when it's open for all bidders, including investors. If an owner occupant puts a bid in the property, they can do it during any one of those periods, including the extended period. If you have an investor and a homeowner that both bid on a property, HUD typically will lean towards the homeowner. They want the homeowner to go in the house versus an investor who's going to fix it and make money. They do have a good neighbor next door initiative. That is not a very common thing. It's for law enforcement, firefighters, EMT, for them to purchase homes. I don't know a whole lot about the program because we don't use it. Currently, there's only one property listed in New York, that offers that the good neighbor next door. But basically, HUD gives you a 50% discount off the list price. Next slide. Submitting a bid, you would go to the HUD home store. You can register as a bidder. You must have an agent. Well, I'm sorry, that's wrong. You do not have to have an agent to submit a bid, but an agent's going to have more information than a regular buyer bidder. Once you get an accepted bid, at that point, you can choose a closing attorney and things like that. As a real estate agent, I always recommend having a real estate agent, especially with HUD purchases. HUD pays buyer agent commission. So you would not have to, as a buyer, you would not have to pay any kind of commissions. So you would go on the site, you would look up whichever property you want to bid, click on the website where it says to submit a bid. You have about 10 minutes. You have to have all of your buyer stuff together, name, social, everything. And then once you get that submitted, you'll get a confirmation email that gives you all that information reiterated. And then you just kind of have to wait and see if your bid's accepted. The biggest thing on this slide is for inspections. If a buyer wants to have any inspections done, they have to turn utilities on in their name and pay for it. But before you can do that, you have to ask the asset manager if you can have utilities on in your name as a buyer. If the property is winterized, the buyer also has to pay to winterize it and de-winterize it for those inspections. Okay, you can do the next slide. Next slide is just a snapshot of kind of the bid page. Kind of already went over what you need. Next slide. Earnest money. So once you get an accepted bid, HUD starts a clock. It is, I believe it's 24 hours, but I put 24 to 48 hours because it's been a while since I've done a bid. But if you do not get that checklist done, HUD will cancel your bid and move on to the next buyer. HUD does not play. They do not care if there's delays. They want streamlined process. There are two earnest monies. It's either 500 or 1,000, depends on your price of your bid. And then the other big thing is with that earnest money, as an investor buyer, under no circumstance do you get your earnest money back. So even if you get under contract, you do an inspection, you find something that, with the structure or whatever, and you decide to terminate, even though it wasn't disclosed or anything like that, you do not get your earnest money back. As an investor, HUD looks at investors and says, okay, well, they're investors. They should know what they're doing. We're keeping your earnest money. Next slide. That's all. That's all I got.
So do you have to disclose that you're an investor, or could you just say you want to buy the house?
So HUD will catch you. And you, me as a real estate agent, can lose my license. If you tell me, hey, I'm an investor, but I'm going to buy it as an owner occupant, I'm not going to lose my license for that. And if HUD finds out, not only will you get in trouble, but then I'd also get in trouble and lose my license.
Yeah. What about the move-in flipper, right? That's kind of like Drew's strategy. Drew will buy something, he'll move into it, he'll fix it himself or with help, and then move out maybe a year and a half later and turn it into a rental. There are certain guidelines. I would have to look them up as far as certain guidelines of how long you have to live in the property. HUD has guidelines. You have to live in a property for X amount of time. But I tell my buyers, look, if we're putting in a bid in as an owner occupant, you're an owner occupant. I don't want to hear about any other plans, nothing like that. You're an owner occupant. But they do have certain time limits. I just don't remember what they are off the top of my head. As an owner occupant, you can also typically get HUD to pay up to 3% of your closing costs. Whereas an investor, obviously you cannot. Okay, cool. I had one of these houses under contract in 2019, and found out something about the plumbing that I didn't plan for when I put my bid in, and had to let it go. Lost my earnest money. But I had a really kick butt agent. I was going to use a different word. I had a great agent that split that cost with me because neither of us knew it was going to happen, which is cool. And I wish I didn't cancel that, because I'd probably have $80,000 in appreciation right now if I had the thing. So
most HUD properties are significantly underpriced. So if you can purchase HUD property, even if you do need to put some work into it, 9 out of 10 times you're going to have some really good amount of equity in those homes. And that's pretty much any foreclosures, VA foreclosures as well. They're just better condition most of the time.
Yeah. I'm so excited. If anybody has any questions, please speak up. But Drew, could you go to slide 5? So I'm just really excited about this time because I'm actually aware of what's happening in the world. And in 2010, 2011, when I bought my first one, I didn't really know what was happening. But Sean just talked about prices going down. We know new construction is freaking out right now, trying to figure out what to do. Foreclosures, based on this HUD thing, are kind of flat right now, right? There's not a ton of them. So it's just really cool to say, hey, I'm an investor. I say I'm an adult now because I'm 37, but when I was looking at this, I didn't know what was going on. And just to analyze things and say, okay, we're moving this direction. Like Sean was saying, let's be ready. This is a really good time to come up with really crystal clear criteria, like Brandon Turner says, and says, hey, I know 3.2s are doing well, and we're in this part. I think 3.2s are always going to do well. I want to buy 3.2s and just get really, really like accurate and defined with what you want to buy, and just start looking and pull the trigger. And because of the trends, that you're gonna do well. It's really fun to look at what you guys said with this. How do we define these different markets to help us make intelligent decisions to build wealth? Yeah, but we don't have to. Does anybody have anything they want to talk about? Any questions? Is anybody buying anything personally right now? No, I'm in a race with somebody on this call to 20 properties. Well, sweet. Well, we don't have to stay on forever, guys. I enjoy hanging out with all of you, and appreciate you. Sean, thank you so much. Drew, thank you so much. Dominique, thank you so much. Hope you all have a great day.
Thanks, you too. Bye.
Yeah, bye.
Thank you.
See you, everyone. Bye.
Hey, Rima, how are you? Let me turn off the recording real quick. Stop recording.